Hello to all traders and welcome back to the market review brought to you by Orbex. So we see gold just ticking higher away from the 2300 handle after geopolitical tensions are still heightened, and obviously with the Fed not giving much of a signal whether or not it's going to start cutting rates like the Bank of England, the Bank of Canada and the European Central Bank. Will we have any more of distortion, volatility on the yellow metal as we go into the second half of the year, and not only that, until the next Fed's interest rate decision and the FOMC projections. So in the meantime, gold has just been subdued, just trying to remain heightened, but it's just gone fallen a couple of cents on the dollar from when we were here last week. So let's just take a quick look on gold first of all. So as I said, on the 4-hour chart only today, just want to look at intraday analysis, because if we just zoom in on the chart, we just point out the 2300 handle. I keep pointing this out because it's where a lot of traders are thinking this is going to be the confirmation drop. If we do get a break and a confirmation, this was not a confirmation, as you can see here, because we had a little bit more of a move to the downside. We had the bearish candle close, but then we had a bit of indecisiveness before a jump back up. And if this is only an intraday, as you can see here, within the day, in the 10th of June, the beginning of the last week, as you can see here, we popped back up above the 2300 handle, and since then we've just been slowly grinding higher on gold. So this is a big indication that gold is not ready to have a major sell-off at the moment. It's more looking likely that we're going to be hitting the previous peak roughly around the 2380, 2390 area. A long way to go before the record high of 2450 is going to be hit, but gold at the moment, as you can see here, is in a bit of a bullish channel. So we're just waiting to see if that's going to keep on moving a bit higher as well. So lots of things to take into consideration, and waiting to see from the next. As I said, the Fed is the big driver in the market at the moment, because most of the central banks are starting to contemplate cutting rates. We're just waiting for the Fed to give a signal on where they're going to go next as well. So let's just take a quick look on the dollar as well. On the 4-hour chart, as you can see here, we were a bit subdued on the dollar, but just in the last few sessions from last Friday, if we could just point out this slightly bearish undertone here, and you know, with the RSI hitting a double top and falling a bit lower, there was always going to be this correction in mind. But the dollar is above the 105 handle, which is quite significant because that's the next major support for a lot of the traders that have been asking me, where is dollar going to go next? How far can it go? How far lower can it go? Well, the 105 handle is a lot of economists' major move. So, major support for the next move. So this is where we're looking to next, and this is where we possibly could see more of a downturn. As you can see here, very, very big bearish candle not so long ago. This is when the Fed and the CPI data was released. And then we had a bounce back, total V-shaped recovery and a break. So lots to sink in. Obviously, we've got PMI data, a host of PMI data in tomorrow's trading, which could start shaking up the market as well. So we'll bring you all the latest in the headlines on that, as usual, on our Telegram and YouTube channels. So stay with us, stick ahead, and we'll be back next time around. Bye for now.